Hey, welcome everybody. Thank you so much for joining this webinar about oil and gas. I'm here joined with Barry Portman. He is the CEO of BCP Resources, and we're here to just talk about what is going on in oil and gas, what's the environment for investors, what they need to be thinking about. Barry is right there in the oil patch in the Permian, in the most prolific area in the United States, and is an expert operator. I'm very pleased to have him with us. We'll do a very brief introduction with Barry, and then we're going to dive into the frequently asked questions that both Barry and I get for investors who are potentially interested in getting into oil and gas. Barry, I'm so glad to have you with us. Thanks for doing this.
Sure. Thanks, Gary. Good to see you.
100%. Why don't you tell the folks briefly about yourself, about BCP Resources, and that family-owned company in Midland, Texas?
Yeah, I've been in oil and gas now for almost 27 years. Started with Marathon Oil back in 1998 here in the Permian Basin. Since then, I had a lot of different jobs in oil and gas, cross engineering and operations. Most recently, from 2014 to 2019, served as the VP and general manager for Pioneer Natural Resources based here in Midland. Throughout my career, I always wanted to start an oil and gas company and be an entrepreneur. My wife, Cindy, started the company together with me. She started with rent properties here in the Midland area, built a relationship with a bank, and then picked up our first few wells with the same bank we did real estate deals with, and then grew from there. So she started BCP in 2020. I started doing it full time in 2022. And now we've grown to about 267 operated wells and about 1,000 BOEs a day of production. We are here in Midland, wells that we can drive to. This is where we're from. Was transferred to Houston for a period of time back in my Kinder Morgan days, in between Pioneer and Marathon. Being here in Midland, a really good fit for us. A family-owned company. We're small. We like to know our employees, and we're just going to grow that way and enjoy what we do.
I love entrepreneurs' origin stories. I think the key points there are you are the direct operator. You can drive to your wells. You've developed a portfolio of oil and gas leases. You're operating some, and you still have space for other projects and other opportunities, but you've developed up this portfolio and you're looking for more deals, but you have current deals. Those are really high points I'd like to highlight for folks. Let's dive into some of the frequent questions we get. First one, what is your outlook for oil and gas given factors like alternative energy sources and geopolitical uncertainties we're dealing with today? Is this a short-term play, long-term play? What's your outlook for oil and gas?
Oil and gas is a long-term play. A lot of people don't realize that oil and gas is used in nearly everything, not just driving your car, but natural gas to generate power. If you're charging a battery, that's likely coming from a natural gas that's being burned to generate power. So, over time, there's going to be other energy sources, definitely, there's wind, solar, lots of other energy sources, but for what the world needs, oil and gas is going to continue to carry the bulk of that for a long time into the future. Regardless of your outlook on it, alternative energy sources, there's always going to be oil and gas. Alternative energy sources aren't bad. They're going to continue to be developed. Technology is going to move like it does through time, but oil and gas, you're going to have it. So it's a stable, long-term play. There's going to be some price volatility. I mean, it's a market commodity that definitely drives it. Kind of mentioned in entrepreneurship earlier, leveraging on your comment about us and how we are. As an operator, as an entrepreneur, there's really two things you have to have in your business. You have to run a business, which is one, and that's almost independent of oil and gas. You need to manage employees, your cash flow, your bank relationships, all the stuff you have to do transcends across everything. What we did at BCP, that's the part that Cindy really leverages for our business, is running the day-to-day business. I bring the oil and gas piece where we're an operator, where we operate our own oil and gas wells. So having that specific experience gives us that second half and entrepreneurship. And in terms of the outlook of oil and gas, it's a commodity that's going to be there a long time, and it's a long-term play, but it's a business just like any other. So, if the price of oil goes down, you need to tighten your belt, reduce your cost. The price of oil goes up, do exactly the same thing. Don't spend a bunch of money and do drop projects that make sense just because the price of oil is higher. Focus on being a good entrepreneur and running your business, keeping your costs low, taking good care of your people, And if you do all of that, regardless of commodity price, that's the key.
I think that's a voice of experience over 3 decades of success.
A few downturns.
What is your outlook in terms of the Trump administration? Is this going to be good for the industry, bad for the industry, neutral for the industry, just at a high level?
I think it's going to be good. I mean, just my crystal ball is no better than anybody else's, but typically in Democratic administrations, you see oil prices go up, and typically in Republicans, you see it go down. That's just kind of a historical look. But I think the key with the Trump administration is entrepreneurship, business. Oil and gas is just a piece of that. I think the Trump administration is going to be very favorable to businesses that are owned and operated here on U.S. soil. So that can affect oil and gas just like others. So I think there's probably going to be some short-term negatives. I mean, you're going to see oil and gas prices bounce around a little bit. The talk of tariffs, everything else that's gone on with the Trump administration and the division between political parties and everybody's view and back and forth. So that definitely affects oil and gas prices. But I think long-term, it's going to be really good. I mean, economic growth within the United States. And the best thing that I like about Trump's outlook is he wants the United States to produce more oil and gas and sell that. The United States is still importing oil today. So continuing to export and sell to other countries, just like other products, that rather than being built somewhere else and sold inside the U.S., let's build it here in the U.S., sell it to other countries. On the same, definitely true about energy. There's a lot of LNG plants that are in, that's liquefied natural gas, so that natural gas can be exported out of the U.S. That's a large chunk that's going to be in our industry that not a lot of people pay attention to. I think the Trump administration definitely realizes that and will help streamline some of those regulations to get those plants online quicker to export more natural gas.
This is something that I learned and pass on to people new to oil and gas. Out of an oil and gas well, depending on the well, you get oil, gas, and some natural gas liquids. So you're getting 3 products. So when you sell, depending on how gassy that well is, you might be 50% or 85% liquids, but you still have another product you can sell that is pretty independent of oil prices. All right. Well, awesome. Thank you for that. How about on the regulatory side? Are there any regulatory changes you see on the horizon that might potentially impact oil and gas, or just in general, what's the regulatory environment right now? Is that a risk for investors?
Well, I don't think it's a risk. I mean, it can definitely delay things or change return profiles, but it can provide a risk. But as operators, it's kind of like running your business. You know what those regulatory concerns are, and you try to adjust your business to work around them, whether it be deadlines or whatever it is that you have to do. So I think if it's managed right, it can definitely be something that's not too negative of an impact. But where it really comes in is the federal government has leases. So you're producing, the U.S. government is providing an oil and gas lease. So if you're talking about oil and gas production, that's something that can be delayed. If the United States government owns those minerals and they're not going to give a lease on it, heard a lot of that in the news. The Biden administration didn't give out leases. So it doesn't even matter if there's a regulatory concern or not if the government doesn't give out a lease. The other part is things like the EPA that have regulations on oil and gas at the state and federal level. It can definitely be a negative sometimes, but I think that flexes a lot with the price of oil and the political government. I mean, what's going on, within our state and the country, it can be a negative, but if you stay abreast of it and manage your business around whatever regulations are there, it's going to be okay. And then we're a member of a Permian Basin Petroleum Producers Association here in Midland. They do a lot of work to help work together with state government to understand regulatory issues. And even on the federal levels, a lot of producers there's other groups that do similar things. I think oil and gas is a good industry where everybody works together and tries to help regulations where they can. But in my opinion, it really boils down to just knowing what they are and working your business the best way you can around what regulations you have at the time.
What I've observed is that the industry is not anti-regulation, it's anti-overreach. So just don't make an excuse about some sage grouse or something and say you're protecting animals when you're really just trying to subvert an entire industry. So it's not like the industry's anti-regulation at all. I think everybody wants to be good stewards in the industry. So I think that's an important point. And then just to make a clarification on what you said about the leases. So that's on federal land, but if you're in the great state of Texas in the Permian Basin, that's private, which is different than, a lot of countries in the world. The US can have private ownership of mineral rights. If you live in a lot of other countries in the world, they don't do that. That's owned by the government. But you guys can operate and own your own mineral rights, produce your own wells without state interference, except the state of Texas does have a severance tax, right?
That's correct. Yeah, there's a severance tax. That's one of the reasons the state of Texas doesn't have income tax, is mainly paid on oil and gas reserves that are produced within the state. And then this does own some oil and gas leases, and that's the University of Texas Land System manages those. So UT Lands. So they also own surface in different parts of Texas. So, but it's one of the good things. I mean, that severance tax pretty much runs the state of Texas, and provides a significant amount of revenue. Why we don't have a income tax in Texas, state income tax.
And it also makes interests aligned. So the state wants you to be successful so they can keep revenue where it needs to be. You mentioned price volatility. Prices will go up and down, but how do you mitigate those? What are some of the things that you put in place to operate a good business? Reduce that in.
Number one mitigation strategy we talked about earlier is just focusing on your business. I mean, keeping your costs low and doing everything that you need to do to run an efficient business, regardless of your commodity price. So that's the first one. Then the second one is the hedging market. We hedge about 75% of our production over 12 months and about 50% over the 12 months following that, up to 24 months. So that means basically that you're committing to a price that you're going to sell your oil and gas for at a period of time. So for example, if we were to pick up a costless collar tomorrow, we would say, okay, in 6 months, we're going to sell X number of barrels for a $75 ceiling and a $65 floor. So if the oil sales price is between 75 and 65, nothing happens. If it's over 75, we have to pay the difference between 75 and where it winds up. And if it's below 65, we get a check for the difference. So for a quick explanation of how hedging works, there's lots of good resources online. You can pick some quick videos that explain the crude oil and natural gas hedging markets. It's just a commodity feature and hedging where you can hedge your risks. Different producers look at it different ways. Most of our stuff is more legacy wells that have been producing for a long time, or wells that we're putting back on production that we kind of know what they're going to make, and it's going to be a low decline rate. So our production is very predictable. Some producers are bringing on new wells or working in unknown zones where they don't know what the production is going to be. They might hedge a smaller portion. So those two things are the best way to run your business. Have a good hedging program and be smart running your business regardless of price.
That's a big difference than you get with a lot of other alternative investment profiles. The rent you get from an apartment complex is fairly stable, but it does change your net operating income quite a bit, and you're not hedged on that. So it is nice and counterintuitive. People say oil is risky because the price goes up and down. If you don't do anything, you just go naked, then it could be very risky. But if you got a program in place, you got a good hedging program in place, plus, like you said, run a good business. Keep your costs low. Don't get overextended. Be a smart operator. That's a big deal. Okay. How about on the Permian Basin? So you operate in the Permian Basin. It's in the news a lot. It is the biggest oil patch and producing section. What makes that region special for investors?
It's just a large area of production. The Permian Basin is a geologic feature that holds a significant amount of oil and gas reserves. So been around for a long time. I mean, over, discovery is a little over 100 years now. So that the Permian Basin has been on production. So it's just a large geology function. And, there's other plays. I mean, you hear about the Marcellus, which it's a gas play in the Northeast, but there's other basins in the U.S. that you can pull up a map and see other oil and gas basins where your largest, deposits of oil and gas are within the United States. And that's what's made the Permian special. We've been in production for a long time. There's a lot of oil and gas reserves here. A lot of wells have been drilled. As technology's progressed over the last 100 years, when I started my career with Marathon, there were, very few horizontal wells. I mean, now companies are drilling 3 to 4 mile shale horizontal wells. That wasn't a technology that was employed back then. Early in my career, I drilled some short radius horizontals that were between 800 and 1,000 feet. Now some of the producing horizontals are 4 miles. So huge technological difference there. We've known for years, even in the 40s and 50s, that the oil and gas reserves are in a lot of these different zones, but the technology just wasn't there to get it out. So, over time, you've seen technology develop, and there's these zones that exist in the Permian Basin, and there's significantly more that still haven't been tapped, or technology can do the extraction of oil and gas from them, and that's going to continue. That's really what makes the Permian Basin special. For the most part, there's no dry holes out here. You know where the oil and gas is. There's tons of reserves and tons of zones, and the question is just which ones make the best sense to go after in the price environment that you're in.
If you know what you're doing and you're a good student of history and can read the maps and understand the operators, you know where it is. It's not any big surprise. One thing that I have to talk to people about is they say, well, you're going out and exploring. It's like, no, there's really no exploring. The exploring was done already 100 years ago, and they know where the oil is and what zones going this way, like a layer cake, and in what kind of geologies. Some operators like these zones, some operators like different zones. And then if you can get in a zone that's like a shale, that's where you go sideways, and they just stay in that zone for miles. Okay. Let's talk about the different ways to participate in oil and gas at a very high level. People tend to get confused about mineral rights and working interest. After that, if we don't touch on it, what's the role of the operator in that part?
Sure. Working interest is where you own a working interest in a well. You get your share of revenue and you pay your share of expenses. If you own 10% of the well, you pay 10% of the cost and you get 10% of the revenue. And there's two types of working interest. There's operated working interest and non-operated working interest. The difference between those two is when there's more than one owner in a well, one company is designated as the operator, typically the one that owns the largest percentage in the well. For example, BCP has a lot of wells, 100% working interest in. So now we have some that we only own, say, 80% working interest, and then we have other owners in the other 20. So with the largest interest, we're designated worker. And there's an agreement called the JOP, when operating agreement. So it's your job as the operator to produce the wells, and then you send a bill to the operators to pay their portion and also their revenues. It's just kind of a broken, one person to operate the well, and the non-operators can pay their portion, non-operated working interest. And then there's a royalty. A royalty interest is often called an overriding royalty interest. That's mineral ownership or overriding royalty interest released, or the only fees that you pay are processing fees and taxes. So like severance tax for the state of Texas, that comes right off the top, royalty interest included. And then you just get a check. You don't have to pay the lifting cost of the well. You don't have to pay someone to go pump it. You don't have to pay for the water to be disposed. You don't have to pay for the electricity. You just get a chunk of the royalty or the revenue coming off the well. So those are really the three big pieces. Not working, that's where you can control your own destiny, right? You're the operator. We work hard to keep our costs low and improve our margins. And as a good operator, you have a lot more control, and your non-operators can benefit from that. The downside to non-operators is sometimes you do have operators that their cost structures are really high. They do spend a lot of dollars. It might take them more money to do something than it would another operator. And in that case, there's not a lot you can do about it as a non-operator. I mean, there are some provisions in the joint operating agreement where you can have a chance to participate in some activities versus others. But typically, most of your operators are good and prove that can be highlighted non-operating interest because you have no control over that piece of business.
So on the controls, what I'm hearing is control over the cost, assuming that you're with a good operator that you trust, no problem. You'd be okay with a non-operating interest. What about the timing? I've always been curious about that. If you're the operator and you've got the most working interest, are you the one that's making the drilling schedule? I mean, the entire plan?
In most cases, yes. Some operating agreements are different, but in most cases, the operator proposes work to be done on the wells, whether it be a workover or a new drill. they propose an AFE to the other operators, and they can choose if they want to participate in that activity or not. So typically that falls on the operator. There's a lot of units that companies work together over the years, but typically how it goes.
What's an AFE?
Oh, application for funds expenditure. So
Got it.
you
It's
got it.
basically just a proposal, right? Of how
Exactly.
much it's probably going to cost. Are you in?
Exactly. And, companies outside of oil and gas too, they do those internally. So for example, if we have 100% well, we still do a AFE. We track our costs on that specific project. So we can look back and see how those costs are categorized, and then what our return looks like once that project is done. So.
All right. Put yourself in the shoes of an investor now. If they were evaluating an opportunity, what would be some of the things that you would suggest that they think about or ask or get answered to their satisfaction before getting involved?
Well, if it's a non-operated interest, I would be very conservative on your estimates in terms of future growth and revenues. Look at the assets historically. What's that non-operated portion typically get in terms of cost and revenue, and what does that look like over time? Very conservative on that, because you don't have control as the operator. So basically, you historical how it's gone, base things off of that. On the operated side, you want to do much of the same, but that's where it comes in with the operators. Hey, what type of projects are they going to do? What kind of technical focus are they going to put on those wells in that project? That depends on your investor profile. If you want something that's slow and steady and you don't really want to, spend any money at wells that are just producing and they don't have no real plans for any drilling or workover opportunity. But if you're an investor that wants to get a higher rate of return, then you likely want to get exposed to some of those activities and working wells over, bringing wells on, drilling new wells. So that's kind of the things that you want to look at in this.
So you're touching on it here, but I'd like for you to maybe say a little bit more about it, the different kinds of projects. We toss around that word in this space, but what are some of the kinds of projects? There's like drilling programs, maybe workovers, and some other things. So maybe just kind of elaborate on those.
You have drilling wells, which are new wells. Most times now, those are horizontal wells, 1, 2, 3 mile wells that are drilled. Your risk profile, it's not going to be a dry hole, but how good are the wells going to be? How economic are they going to be? You can look at similar wells in the area. For example, some wells in this area make 1,000 barrels of oil equivalent per day, and some of them make 300. So you might say, well, I'm going to pick the middle of those two just to be conservative. And here's cost. Those are kind of your variables in drilling a well. Doing a workover, or what we call a recompletion, or put the well back online, that can be horizontal or vertical. Those can typically be jobs that aren't as costly, can be done a lot quicker. It's kind of the same thing. You say, well, one well's been recompleted in this zone. Some of them made 50 barrels a day. Some of them made 10. Well, maybe we pick in the middle and say, we think we're going to make 25 or 30. So that's where the kind of running your business comes in, is if you, evaluate the opportunities, each one the same way, and you run your business well, then it comes out in the averages. So you do a real, if you do a good job on spending your dollars on, whether it's 10 barrels a day or 50 barrels a day, those projects are going to come out in the mix. So those are kind of the, different type of projects that you see out there.
Yeah. Awesome. How about let's bottom line this for people. At the end of the day, they'll listen to me or people like you, and they'll say, so the last question I usually get is, Gary, what would it take for me to totally lose my investment?
So depends on the project that you invest in. I mean, if you invest in a new well, say there's some sort of major issue drilling that well, they have a casing collapse or some problem that results in that well not producing anything, that's where you're going to lose your investment. On other projects, unless the company goes belly up, unless the company really is not paying attention to their business, those are really the kind of two things where really hard to lose your entire investment, because, especially in the Permian Basin, if you're talking about wells that already exist, that you're doing workovers or existing production, those are known quantities. And as long as the operator is doing their business, there shouldn't be a, complete loss of investment. What does happen when oil and gas, and not just oil and gas, but other businesses, there's a lot of scammers out there for investors. So you hear stories all the time of, hey, somebody was selling a working interest in a well and they collected some of you and then they disappeared. These insurance scams too. People have been selling insurance. You get a text on your phone, somebody's, tries to make it look like Microsoft Office is reaching out to you to log in, but it's a scammer. So those are things that affect oil and gas, just like any other industry. So I would say, make sure, number one, run your traps, make sure it's legit. And then number two, if you're comfortable with the operator in the project and you have a good one, then I think your chance of losing everything is extremely minimal.
On the risk side, the other part is that people ask me about is what kinds of risks that they're taking on. I think that they know that there's financial risks, but sometimes they'll ask about environmental or safety risks. Can you talk about that in terms of what kind of risks the operator takes on?
Yeah. So the operator is responsible for that. So those costs can definitely be shared with your investors, or it's definitely shared on a non-op partner well. But your safety and environmental risk are, there's definitely risks there in terms of, being penalized on the environmental side, lawsuit from the landowner, lawsuit from the state, also, injuries that happen on well site and safety perspective. And there can definitely be lawsuits. All operators carry insurance for those things, and you hope you're never faced with anything like that. The oil and gas industry is extremely safe. It is a high risk industry, but most operators carry a good level of insurance and have a really good safety program. So those mitigates those things. And actually here in the Permian Basin, driving is the most dangerous thing we do. So believe it or not. So everybody thinks oil and gas is really dangerous. Yes, it is a high risk activity, but there are more injuries on the road driving to wells than there is on the wells themselves.
Yeah. Yeah. And I'll attest to that. I remember you said that to me years ago, and then I was out there by myself driving around. I was like, Barry's right.
Yeah.
People are flying around out there. I can see that for sure. So, okay. Thank you for all that. So we talked about the mechanics. We talked about the economy. We talked about regulatory. We talked about risk. We haven't even talked about returns. Let's talk about, I know that the answer is going to be, it depends, but can you give people a sense of what kinds of returns they might see in a project, and maybe speak to the decline curve? And then after that, we'll wrap things up.
Mm-hmm. I think in most cases, the risk profile is a little bit higher. So if you're looking at an investment portfolio, you talk to your investment advisor, they'll tell you things like private equity, private stocks, or some of the higher return, higher risk type things. Oil and gas, you should be able to target 6 to 15% rate of return problem. It can go lower and it definitely go a lot higher. Oil and gas banks that do oil and gas lending use the SOFR index plus probably 2 to 4% on top of that for interest rates. If the SOFR is 5 and their metric is plus 3.5, then it would be 8.5% interest. There's another level of debt called mezzanine debt, and that's a layer on top of term loan debt. A lot of larger independent banks or private equity groups in oil and gas, they're targeting the mid-teens return, 10 to 15%. So this kind of gives you an idea of, your traditional banks that do term oil and gas, somewhere in that 6 to 9%, probably depending on interest rate, higher. And then your mid-teens for your mezzanine or higher risk debt. It kind of gives you a portfolio there, but I think that's a really good target. And you can definitely have your own. There's some projects that can get you better returns. If you want to invest in oil and gas, the best way to do that is with a really good operator, the really good track record. You know what the projects are going to be. That's what we put our focus on for our family and our future. It's a business. You feel good about it. But I wouldn't encourage anybody to put 100% in natural gas. You're natural gas, right? Don't put all your eggs in one basket. I think oil and gas is a great investment in the world. It's a product that's going to be in need in the United States and the world for a long period of time. And it's a really good history.
I think that the risks are often stated in people's minds. But you just need to be, like you said, the way you can mitigate risk is be with a good operator, make sure they've got good cost controls, good track track record. They know what they're doing. They care about you. There's no substitute for caring.
Yes.
And being able to, have some technical things in place, like your, we call it those hedging programs and things like
Right.
that. At a high level, oil and gas is, you know what you're going to make, you know how much you're going to charge, how much revenue you're going to get. You can predict it, and you know it's going to be in demand over long term. Stick to your knitting is one of my takeaways. Stick to your knitting, be focused, don't get distracted, and it'll work out all right with a good operator. Thank you for answering all those questions. I'm going to throw it over to you for any last thoughts, things that you think an investor should know, things we didn't cover, or anything else, and then we'll wrap it.
Yeah, I think the biggest thing, I appreciate the chance to share about our oil and gas industry. It's a good industry. It's a good community here. I mean, there's others in, other basins in the United States, but oil and gas is a product just like anything else. There's a lot of speculation and stories. There's even a TV show now, which some things are true, some things are not. It's a clean TV show, by the way. There's a lot of stigma around oil and gas, but if you break all of that down, it's really a good industry. I mean, we produce and sell a product just like somebody that manufactures a product to sell. Gas is really good. You know where it is. For the most part, the cost to get it out, and you know who you're going to sell it. I mean, there's not many products that you can really find that with. So we know what it is, where it is, we know how to get it, we know who to sell it to. And if you manage all those things right, it's a really good investment. But it's just like, you're, always advised on 401ks or investors do is, hey, pick the funds you want your money in and how many years you've got till retirement, and then leave it. Don't look at it. Don't worry about what the stock market does tomorrow versus what it does in 6 months. Worry yourself to death about what the price of your 401k is today versus tomorrow. Oil and gas is a lot the same. Just focus on the business and know the products you're going to get. Keep your costs low, run your business well, and do your very best not to look at oil price. Don't overreact if it's too low or too high. That's where a lot of companies over the years have made mistakes, as oil price rockets up there and well, great, let's go run a bunch of projects, and then it drops again. But the industry is kind of self-corrected for that. A lot of the public providers now are public companies. They live more out of cash, which has really helped stabilize the oil price environment. So that's probably the biggest takeaway. It's a good industry. You know what your product is, and the risks are a lot lower than everybody thinks they are.
Well, thank you. I think that's an excellent summary, and appreciate your time. Hopefully it answered questions for folks interested in oil and gas. If you have any other questions, please reach out to me or to Barry. Barry's the CEO of BCP Resources, and I run Southwest Alternatives. So yeah, please feel free to reach out to either of us, answer any questions for you. But again, Barry, thank you so much. Appreciate all the information you shared today.
Thank you.